Is Best Buy saying bye-bye to Richard Scholl's? And that was close, but how high can you toss an apple? I'm joined by not one, but two great guests, Nadia Damouni, Reuters correspondent, and Jonathan Marino, editor of Reuters PE Hub. Okay, Nadia. So Best Buy says Richard Scholl's rejecting its offer for him to conduct due diligence.
Yeah, absolutely. It's been quite an eventful last 24 hours. We've just seen Best Buy appoint a new CEO, Hubert Joly, who of course comes with a lot of experience. And even Dick Scholl's came out and said, well, he definitely recommends this as a candidate. So he's come out. Then, of course, the board put a number of provisions on Richard Scholl's over the weekend, so negotiations were ongoing, and obviously said that there's an 18-month standstill agreement that they wanted to put in place, which, of course, Mr. Scholl's was completely against. I mean, why would you wait 18 months to put in a bid for a company? Definitely when the company's going through a lot of transition. So it's been a tough time, definitely for investors and definitely for Mr. Scholl's, as we saw this morning.
Okay, and shares are down close to 7% today, Jonathan. Right. Richard Scholl's saying that previously that he's not going away. Is he still not going away?
He says he's not going away. He should probably find something better to do. Investors are going to start going away if these prices keep sliding for their shares. Yeah. They're starting to remind me of another company that had share prices of about $38 to $42 per share. A lot of hype as of late, and unfortunately now they're down about $19 a share. That's Facebook. Both companies too, also having a lot of problem with mobile. Is not really sure how Best Buy is going to solve their mobile crisis with companies like Amazon increasingly advertising to people via handset.
But we have to remember with Mr. Scholl's is that he does own over 20% of the company as it is, and he founded it. So he has this loyalty, this legacy behind the company. So you're going to believe that he's going to try to form some sort of group to do some sort of take private of the company. We will see if that happens, but of course that's quite a long stretch for him right now.
Okay, interesting. Keeping an eye on that. Let's move on to Aetna and Coventry. Big deal. Aetna to buy Coventry for $5.6 billion, Nadia.
That's right. We had a bit of a merger Monday today. So, of course, earlier this year we saw a deal with Amerigroup being bought by WellPoint, and last year we saw Cigna and HealthSpring. So, of course, this is a continued trend as a result, mostly as a result of Obama's healthcare reform, where, of course, we're going to see 30 million uninsured Americans getting coverage by 2014. So I think we're going to continue to see that. It was interesting because stocks, including Centene, which is also a Medicaid company, as well as I believe it's Molina Health Group. And so both of them have actually been on the watch list from investors. So both are trading down today quite significantly. I believe Centene's down about 8%. So that's a bit of a rock, but we'll see because there will continue to be consolidation. United Health is definitely on an acquisition spree, so we'll see what they do, as well as Humana and other companies in that whole scenario.
And Jonathan, shares of Coventry up 18.5% today. Aetna up 3.5%.
Yeah, this is really a sign that the U.S. Supreme Court's decision to uphold the Affordable Care Act is probably starting to pay off for the bankers at the very least. Soon is also going to pay off, hopefully, for all Americans. We also saw HealthNet, along with Molina Healthcare, getting a little bit of a boost on the deals news this morning. Also expect, maybe some pharma activity to pop up.
Interesting. Okay. We're going to say goodbye to Nadia. Come back and see us soon. And Jonathan, you and I are going to move over to the big board and heads up. Because we're going to talk Apple.
Which lunchtime.
Yes. That's a Granny Smith. Actually, it's not a Macintosh.
I actually prefer the Macs.
Ah, of course you do. Because they are up to a new high, Apple today, $664.
It's coming on what might be some mixed news for the company. They're still working out a settlement with Samsung for their big patent lawsuit that's still facing potentially a jury in California. Also, Google now is going to file suit potentially against them for separate patent issues from their new Motorola mobility arm. Obviously, we buy so we can sue.
Right.
However, Google and Apple, as they're going to head to the courtroom to do battle with one another potentially, are also joining up to buy some of Kodak's IP. We had a report on that come out this morning.
Interesting. Okay. And also, of course, buzz on the products, on the new iPhone 5 coming out in October, iPad mini. Story last week about how much further is Apple going to get into television. Is it going to get in bed with the cable companies potentially? We'll have to wait and see. All right, let's move on to some stocks that are moving, including Lowe's. Poor quarterly sales, poor earnings, cut yearly forecast, poor margins, down 6% today.
Lowe's is low and getting lower.
Yep.
And here's part of the problem. Home Depot, their primary competitor, their big comp in the business, has now doubled their net earnings, $1.5 billion to $747 million, which is what Lowe's announced this morning.
Interesting. So just let's talk anecdotally, atmospherically, experientially here. Is it an image problem? Is it a too crowded market space? Because some might say that it's actually, Lowe's can be a very good experience in some cases compared to Home Depot. Just anecdotally.
I'd say we can probably compare Lowe's to who we were just discussing, Best Buy. There's a lot of other outlets to get their products. There are a lot of other places to get their products, and they've both got one big competitor that they really can't seem to keep up with.
Yeah, that's true. Okay. Groupon, we've talked a lot about Groupon. A quick story in the Wall Street Journal today about how some early investors who were in before the IPO heading for the hills.
Yeah, I don't know why they waited so long. The report, I think, said Mark Andreessen was getting out. He's kind of been a bit of a startup whisperer in Silicon Valley. When he starts screaming head for the hills, I think investors should probably follow him. T. Rowe Price is also buying in. Maybe that's not a good sign.
Huh, interesting. Okay, and we've got to close out on Facebook because it seems like almost every day we talk about Apple hitting a new high and Facebook hitting a new low. Today hit 1875. It's getting rough, dropping below $19.
At the end of the day, it doesn't really impact all of their mobile offerings that they're going to be coming forward with. They actually might be hitting a real low soon.
Oh gosh. Okay, let's look at the broader markets here, which we had 6 weeks of gains, but we're dipping a little bit today, not by much, but we're down a bit. Perhaps news out of Europe, ECB, no easing coming soon. So it seems. Still waiting. My watch face is a little bit bigger. Still waiting. Okay, Jonathan Marino, nice to see you. And don't forget, we've got more headlines coming out on our Twitter page. That is @Reuters Insider, and great shows on our YouTube channel. That's Reuters.com/ReutersTV. I'm Lisa Bernhard. This is Reuters.